Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Shandong Molong Petroleum Machinery Company Limited annual report. Shandong Molong Petroleum Machinery Company Limited offers a diverse range of products and services to the energy equipment industry globally. The company operates through several segments, including pipe products, oil sucker and sucker pump, petroleum machinery parts, casting and forging, and others. The company's product offerings include oil casings and drill pipe bodies, pipeline components, sucker rods, oil pumps, and petroleum machinery accessories. It also provides precision casting and forging products, such as large ball valve bodies, mud pump liners, and floating ball valves. Additionally, the company offers API and non-API casing products, line pipe products, precision steel pipes, hydraulic prop tubes, fluid pipes, cylinder tubes, and boiler tubes. The company's products are used in various industries, including oil and natural gas, shale gas, coalbed methane and coal mining machinery, boiler manufacturing, and engineering machinery manufacturing. Its products are also used in energy drilling, urban pipeline networks, and wind power casting fields. Furthermore, the company engages in research and development of new materials for energy equipment, production and sale of metal casting and forging, see water desalination activities, waste heat and gas power generation activities, and manufacture and sale of special equipment. The company exports its products to various countries and regions worldwide, including America, Mexico, Canada, Russia, India, the Middle East, Southeast Asia, Central Asia, Africa, Latin America, and others. With a history dating back to 1986, Shandong Molong Petroleum Machinery Company Limited has established itself as a leading player in the energy equipment industry globally. Shandong Molong Petroleum Machinery Company Limited market capitalization of $10 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Shandong Molong Petroleum Machinery Company Limited holds a significant advantage in their industry. Shandong Molong Petroleum Machinery Company Limited trades at a higher price-to-earnings ratio of 924 times and a higher price-to-book ratio of 13.06 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 80% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes, such as buybacks or dividends, rather than operational deterioration. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through an analysis of the key factors contributing to changes in revenue. On the positive side, revenue growth is driven by several factors. Firstly, an increase in demand for energy equipment industry products has led to higher sales volumes and revenue. Additionally, expansion into international markets has resulted in a 50% year-on-year increase in revenue. Improved capacity utilization rates and enhanced gross profit margins have also contributed to revenue growth. Furthermore, strengthened cost control and efficiency enhancement measures have helped to boost revenue. The expansion of main products, such as pipe products, which account for more than 90% of operation revenue, has also been a significant driver of revenue growth. On the other hand, revenue decline is attributed to specific product categories, including 3 kinds of pumping units and others, which experienced declines of -14.1% and -10.2%, respectively. The decline in castings and pumping units revenue was particularly notable, with a decrease of $34,145,876.14. Net income experienced a significant change between 2024 and 2025, with an increase of $57.4 million. However, This growth was preceded by a decline of $44.6 million in the previous period not shown. The most notable shift occurred when net income transitioned from a loss to a profit, marking a substantial turnaround. The change in profit margins is more pronounced. In 2025, operating and net profit margins decreased, with operating margin dropping from 10.23% to 8.45%, and net profit margin declining from 2.15% to -0.19%. This decline can be attributed to the negative net profit attributable to shareholders after deducting non-recurring gains and losses. The company's financial performance indicates a healthy trend in its ability to generate cash from its core operations. One key indicator of this is the positive operating cash flow, which stands at $1,754,901.62 as reported on page 15. This suggests that the company is successfully managing its day-to-day activities and converting profits into actual cash. This achievement is a significant milestone for the company, demonstrating its ability to sustain itself financially without relying heavily on external funding sources. The positive operating cash flow also provides the company with the necessary liquidity to invest in growth initiatives, pay off debts, or return value to shareholders through dividends. Overall, this financial metric serves as a testament to the company's operational efficiency and financial stability. The company's debt level and interest expenses have undergone significant changes in recent times. In terms of debt level, while the total debt remains relatively stable, there are notable increases in specific areas. Long-term borrowings have increased by $153,809.38, indicating a growing reliance on long-term financing. Additionally, lease liabilities have risen by $178,746.58, suggesting an expansion of the company's assets through leasing arrangements. On the other hand, interest expenses have seen a substantial decrease of -$9 million. This reduction in interest payments is a positive development for the company, indicating improved financial management and potentially lower borrowing costs. Overall, these changes suggest that the company is adapting its financing strategies to optimize its debt levels and reduce its interest burden. The global market has shown significant growth, with an impressive 50% surge in revenue compared to the previous year. This upward trend is a testament to the resilience and adaptability of businesses operating on an international scale. The strong performance of international markets is a welcome development for companies looking to expand their reach and customer base. Management is optimistic about the company's future growth, with a clear focus on innovation and expansion. One key area of emphasis is deep-sea technology, which is seen as a major driver of future success. To support this growth, management plans to upgrade equipment and implement new production lines to address capacity shortfalls. In addition to these operational improvements, management is also prioritizing the development of its internal capabilities. This includes strengthening capital operations to enhance corporate strength, improving governance and management standards, and cultivating talent through recruitment and training initiatives. By investing in these areas, management aims to create a solid foundation for long-term growth and success. The company's financial reports indicate that it has paid out significant amounts as dividends. Specifically, the records show that $12,885,662.22 was allocated for dividends in the current period and $15,106,998.95 in the previous period. Additionally, there are substantial amounts listed under dividends receivable on page 4, suggesting a history of dividend payments. However, despite these indications of dividend payouts, there is no clear evidence to suggest that the company has engaged in share buybacks or repurchases. The absence of any mention of such activities on page 4 further supports this conclusion. That concludes the financial summary for Shandong Molong Petroleum Machinery Company Limited. Feel free to comment below, and I will be happy to answer them when possible.